get started here. Today I'm going to talk about, my name is Michael Valtos. I'm the founder of orderflows.com, and what I'll talk about today, I'm going to give you 3 winning order flow trade setups. Now, there's a lot of discussion nowadays about order flow, what it is, why it matters. So, what I'm going to cover today is what is order flow and why it matters. Why using order flow will put you ahead of 99% of the other traders out there. Key components of the order flow and their importance. How order opportunities that you wouldn't otherwise see looking at a normal bar chart. How order flow will help you take trades with tight stops to limit your risk. And I'll give you three of my winning order flow trade setups that you can use. These are setups that I look for every day in the markets. Before I get started, since I deal a lot in futures, CFTC requires a disclaimer, and this presentation is for educational and informational purposes only and should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Basically, don't trade with your rent money or your kid's college education. As outlandish as it sounds, I know people that have taken out second mortgages on their house to start trading, and after they lost a bit of money, they realized they shouldn't have done it. So what is order flow analysis and how it can help you as a trader? Well, it's the analysis of the volume traded on the bid and the volume traded on the offer at each price. And by looking at the volume traded at price, a trader will get a better understanding of what's happening in the market. Now, I have a picture of a Superdome. This is the NinjaTrader Dome. I have an X over it. A lot of people, there's an argument, that order flow trading is trading with the dome. I use a volume footprint chart, and I'll get into why I prefer a volume footprint chart over a dome. I've looked at a dome for a good 20 years of my trading career, and honestly, what's more important to me is what's actually traded in the market, not bids and offers being placed above or below the market price. And this is the order flow generated trader chart, and you can see it has a lot of information that you don't normally get on a bar chart. You see candles in here. You have the red candle, the green candle. That's your normal candlestick chart. But what you're seeing next to it on both sides is the volume that's traded on the bid, volume traded on the offer. And you can tell when buyers are being aggressive or sellers are being aggressive when you're running into price rejection. You can see market-generated support and resistance and much more. This is information you're not going to get on a normal bar chart. Again, I don't look at a dome. I look at what's traded and make my decision based on that information. Think of it like you want to buy a car, right? You want to buy, the new Corvette. It sells for $75,000. You want to buy it at $50,000. Well, of course, who wouldn't want to buy something for $50,000 that's worth $75,000? So just as I don't look at the order book to see, bids below, there's always going to be people that want to buy below the market price or sell above the market price. I don't want to say that doesn't matter, but that's not important to trading that's occurring right now. What I'm more interested in is what's actually traded. People's commitment in the market as opposed to people's intention in the market. When you enter into a trade, you're committed to that position. You have to do something. You either got to get out, let the contract expire, cash settle, or whatever. If you're not in a position, then it doesn't really matter what you're going to do. So, before I get started, let me just give you a bit of background on me. I want to say, I'm not saying this to brag, not by any means, but I want to give you my background so you understand where I'm coming from and a bit of my history. And you can see I've traded for, well over 20 years on the institutional side. I started on the CME trading floor with Dean Witter Reynolds. In 1996, I moved off the floor when electronic trading really started taking off. A year later, I left Dean Witter to join EDF Mann's global trading desk. EDF Mann is a big English company. They've been around since the 1700s, trade sugar predominantly, but now they trade a lot of energy. They trade everything around the world. A year later, I left EDF Mann. I joined Commerzbank when they set up a futures trading desk in Chicago. I became a licensed Eurex trader. I spent the next 3 years trading Bunds, Babel, Schatz, DAX almost exclusively. 2002, I joined Cargill, which is the big U.S. privately held commodity trading company. It's probably the biggest U.S. privately held company. They trade literally everything under the sun. They account for about 25% of the United States grain exports. 2004, they asked me to go to Singapore and set up a futures trading desk there. In 2006, I joined JP Morgan as a vice president of futures trading. In 2013, I retired from JP Morgan, took some time off, started a family. 2015, I started orderflows.com. Sorry, excuse me, getting over a bit of a infection, got a bit of a cough. And order flows is really my way of giving back to the trading community a lot of what I've learned over the last 20 years. I've worked with a lot of the best traders in the world, a lot of people that have written books on trading, a lot of the big hedge funds that I've dealt with almost on a daily basis for most of my career. All this information is culminated in orderflows.com, in my training, in my software, in my indicators. So what is orderflows.com? Well, it's order flow trading software that runs on the NinjaTrader trading platform. You can download the NinjaTrader trading platform for free. They have a free version from their website, ninjatrader.com. And it takes the standard volume footprint chart and makes the analysis easier for the trader with multiple indicators that show you, when, I'll say when to buy and sell, but, where there's areas of price rejection, where there's areas of price support, where there's indications of trap traders. As a trader, I still think you have to think. Right? I don't want to give people a red light, green light system. If you're looking for a red light, green light system, this is probably not for you. But if you are a thinker, are a trader, you always got to be making trading decisions. It's not like, oh, the light, the indicator turned green, I got to buy, or it turned red, I got to sell. No, you should still look at what's happening in the market. And it's developed by me, for traders of all experiences. Whether you're a new trader, whether you're an experienced trader, you can get something of value from order flow. There's many different aspects of order flow that you can use in your trading. I'm not saying you have to use every single aspect of order flow, but you know what? There are some people that have adopted order flow based off of one or two of the concepts of order flow, and it's changed their trading for the better. It helped them become better traders, more profitable traders. So let's get started. What is order flow and why it matters? Well, it's the analysis of orders coming into and being traded in the market. Right? Earlier I had talked about a dome trading, a depth of market. Those are orders that are being placed in the market. They're not trading. Okay, so again, anybody would love to buy below the market price or sell above the market price, but what's important is what's trading at the market. When traders get into a trade, it shows their commitment to the market. If you're just placing orders in the book, I could place orders, anybody could place orders in the order book all day long. It doesn't mean anything until it actually trades. You don't have a commitment. That's just an intention. So what's more important? Someone's commitment to the market or someone's intent to the market? I personally think it's the commitment is more important than the intent. So why using order flow will put you ahead of 99% of the rest of the traders out there? Well, there's a misconception that order flow trading is a fad. It's not a fad. It's been around for well over 100 years. If you've ever read Reminiscence of a Stock Operator, which a lot of people in the finance industry claim is one of the top 10 books on trading, the main character, Jesse Livermore, he was a tape reader, and tape reading is a form of order flow analysis. It can be argued that Japanese candlestick charts are a crude form of order flow analysis. And very few traders out there use order flow in their trading, and as further extension, very few traders even understand how to read the order flow. But once you understand how to read the order flow, then you'll have a better grasp of what's actually happening in the market. What's driving the market, the supply and demand. Markets move based on supply and demand. They don't move based off of an indicator, of a market being overbought or oversold. Market comes off because there's a lot more supply coming into the market. The market rallies because it's driven by demand. It doesn't go up or go down because the oscillator crossed the zero line. So this is the standard candlestick bar chart, right? But it has a lot of information, but it still leaves out a ton of information. Okay, it's colorful. Honestly, when I first started trading, I loved candlesticks. I thought they were the greatest thing cakes and sliced bread, that are colorful. They give you a quick visual representation of what the market's doing. The market closed higher than where it opened. And it could tell you, if it probed lower or probed higher before closing. They got a lot of fancy names, engulfing patterns, morning stars, hammers, etc. that give it a lot more, make it a lot more interesting and colorful. But beyond that, it leaves out a lot of information. Now again, this is the order flows trader generated chart, and you can see the volume that's traded at price. You can see whether buyers are aggressive. You can see where areas where you have price rejection. You can see market generated support, like this green area, this support in the market, and a lot of other information. You can see bars, points of controls in the bar area that has the most volume. There's a lot of information that you're just leaving on the table. Imagine you're flying an airplane, right? You have a lot of controls. And each control tells you one thing. Okay, well, compare that to driving a car. You just have your speedometer, your RPMs, and your fuel gauge, basically. That's all the information that you think you need. But if you're flying an airplane, you got a lot of other information that you could use to help you fly. And that's what looking at an order flow chart is. It's like sitting in a cockpit with a lot of information at your need. You don't need all of it, but at certain points in time, each little bit of information will help you. So just quick, I'll just go over some terms real quick, just so you understand a bit what I'm talking about, especially if you're a little bit new to order flow trading. So point of control, the POC, is the price in the bar, price level in a bar with the most volume. The delta is the difference between the volume traded on the bid and the volume traded on the offer. The max delta is the most positive level of buying delta in a bar. The min delta is the most negative level of selling delta in a bar. An imbalance, a buying imbalance, is when there's at least 4 times more volume traded on the bid, on the offer than on the bid. Selling imbalance is the opposite. It's when there's 4 times more volume traded on the bid than the offer. And a stacked imbalance is when there are 3 or more imbalances in a row in a bar stacked on top of each other. And this morning there were some interesting things here. This is a Euro stock chart. It's a 15-minute chart, so it's a bit longer duration. And you can see right here, you have this stacked buying imbalance. I didn't intend to really talk about buying imbalances or selling imbalances in this presentation, but there was some prime examples this morning. And this was one. Market came up to the high, sold off, started rallying. You got a buying imbalance, stacked buying imbalance in here. This is going to be a support level, a market-generated support level. And you can see over the next 30 minutes, it came right back inside this zone where these aggressive buyers were. And the aggressive buyers showed up again, and you can see the market just shot straight up after that over the next, next 2 hours. This is a move from, 72 up to, maybe one higher than 88, I believe. But this is market-generated information. Again, if you're just looking at a normal bar chart, you're missing this information. This is crude oil this morning, and this is a stacked imbalance, selling imbalance rather. The first one was a stacked buying imbalance. This is a stacked selling imbalance. Buying imbalance will be support. Selling imbalance will be resistance. And this is more of a rarer case. This is a double stacked imbalance. You got this stacked imbalance here, this stacked imbalance here. It's telling you a couple of things. One, there's probably a stop got triggered in here. You see a lot of zeros, so I'm pretty sure that I know this is what a stop-induced imbalance looks like. Someone, just triggers here and sells down 4 or 5 price levels, doesn't even pull back up in there. But it's acting as resistance, right, in the next bar. Again, this is a 1-minute bar. It traded back up just below this imbalance. I actually got short here at 84. I had tried 87, but I missed them. I chased it down to 6.5, finally at 4 with an offer. And the market sold off. It sold off to 70. Okay, I'd actually tried 69 was my take profit. At 70, there was some size there. It was over 100. On this move down, there was 40, 50 lots showing at each level. There's a lot of iceberg orders in crude oil. Crude oil is a market where a lot of people don't really show their full size. They show 5, 10. maybe 20 lots is considered a big order to show, but at 70 there was over 126 I remember showing. And it hit that level and started rallying back up. I ended up covering it at 77. I didn't get down to 69, but when I was trading down here at 74, I actually moved my bid down to 64. Then I ended up chasing it back up at 77. But still, 708, 710. It's 2 minutes. It's a nice move of 7 cents. 7 cents on 5 lots is $350. In 2 minutes, that's a nice little trade. I just happened to be looking at crude this morning. I don't normally look at crude at that time. So order flows will show you hidden trading opportunities. Again, like I showed you here in this crude oil, you have this stacked imbalance. You're not going to see this information on a normal bar chart. It's just not going to show up. So, order flow charts will allow you to look inside the bar, showing you the buying and selling, whether it's passive or aggressive, is volume light or heavy, are prices being rejected, or is there stopping, stopping volume, meaning heavy volume at certain price levels, or is price being accepted? Price acceptance means people are happy to trade at those levels. People talk about markets going into consolidation, but really, people trade the markets to transfer risk, and they want to trade at levels that are fair to each other. That's where the most volume is going to occur. And the other thing that order flow will help you with is it's going to help you take trades with tight stops, so you limit your risk. I mean, nobody wants to risk everything that they own, right, or everything in their account. But often, I deal with a lot of traders, new traders, and they just pick arbitrary dollar amounts as their stop price. $500 for some reason is a very common price level. I don't understand. It's often they're risking more than they really need. Order flow will allow you to put your stop closer because it's based on what the market's doing and telling you when to get out of a trade that's not working. So would you rather get out of a trade that's not working when you know it's not working, you can see it's not working, rather than after it's not worked and stop you out at at your full risk? I mean, why risk 500 when you can only risk 200? To me, it just makes perfect sense. I mean, I don't like to leave money on the table. I mean, there's times I take stops, at my full stop price, but there's times I get out of trades, at a smaller loss than the full maximum stop price. So now that we talked about all that, I'll get to the real meat and potatoes, the 3 order flow trade setups that you can use. I mean, let's face it, you came here because you want to learn how to use order flow in your trading, right? Traders do it for money. I mean, I don't know anybody that trades as a mental exercise to exercise the brain. They trade to make money. I mean, that's why people come to the markets. And the 3 setups that I'm going to talk about today are, first is the extreme point of control. Second one is the single print price rejection. The third one is the delta surge. So these are 3 different parts of order flow. Again, you don't have to use every single one. I mean, you can combine them. They don't all happen at the same time. And part of being the traders, you got to have different tools in your toolbox, right? Because there's going to be times when, one setup doesn't work, but the next one does, right? I mean, part of taking trades, is I want to say it's a numbers game, but it really is. You got to put the edge on your side and take trades, take trades, take trades. So the first one is extreme point of control. So again, point of control, I explained earlier, is the price level in a bar where the most volume is traded. It's the price level with the most volume, can be considered the value area of the bar, right? Markets move from value area to value area, right? Keep that in mind. That's what markets do all day. Now, the point of controls can appear anywhere in a bar. Remember, it's based on volume. When the point of controls occurs at the extreme of a bar, it shows price defense, right? And you need to watch for the market to move away from that level. Now, what does that look like on a chart? This is what it looks like. I have an indicator. I hate to use the term indicator, but it's a tool. It draws on the chart. You could adjust it, whether you want to appear at, at the top level, the top 2, the top 3. And when I talk about it being at the extreme, in a down bar, a red candle, it should be on the top. For a green candle, it should be on the bottom. And what it's indicating is there's some stopping volume up here. There's some price defense. So you can see, as you get this move here going up, you hit this price level here where there's some volume up there, and you see the market sells off. Comes back up, gets through that level by a few ticks. Again, you got the point of control up there, and then the market sells off again. So if you're looking at a normal bar chart, you don't see anything. This is, this is where it appeared right in here. But if you're looking at this chart, you don't know if it's going to keep going up or go down or what. You can't make heads or tails of this. I mean, some people will say, well, this is an engulfing pattern. You got a hammer here or a star here. Yeah, but you can make that. You got a star here. This one worked out. You got a lot of other candlestick formations that aren't working out either. This is how it looks. This is the beauty of many of my indicators, is you could put them on a normal bar chart. So, as you're learning how to use order flow, you can still plot some of these indicators on a normal bar chart. And it really opens up your eyes sometimes. This is information that, order flow information that you can use on a normal bar chart. And you can see how, on the red candles, it's acting as resistance. It sells off, it sells off. On the green candles, it's going to be, it's going to be a support level. You see, this one went sideways. This one, it rallied. Okay, this is another example. It's a mini Dow. And you're working your way down, boom, you hit this level. Point of control right on the bottom. I'm not going to talk about these ratios in this conversation, but this is something else that I've developed to help with the order flow analysis. And you see how the market rallied off of that. There's some volume down here to stop this move. It's price defense. Again, if you're looking at a normal bar chart, how do you know that this isn't going to be the low, or this is going to be the low? You start rally, come down here, this is the low. Well, if you're looking at, if you use the indicator, you can see it right there. Boom, it's clear as day, and you see how the market rallied. And this is a nice move from 18,940 up to 970s. If you just catch one or two moves like that a day, it's happy days. Crude oil. This is an area we're just going sideways in here. Okay. Well, you want to, after you're going sideways, you want to look for a clue that you can start to move out of the sideways activity. And here you got it. You got your point of control right at the bottom of this bar. 222 lots traded there. Sellers were in there trying to move it lower. They couldn't. There was somebody stepping up here defending this price level, and you can see the market rallied. You're looking at a normal bar chart. You can't make heads or tails of this. This is the area right in here. You just hit the low, went up here, you went sideways. Are you going to go down? Or are you going to keep going up? You don't. At this bar chart, honestly, you can't make heads or tails out of it. But here it is with the indicator, indicating, there's the volume in there, the price defense. And you can see the move, from 80, 48.80 up to the 49.50 where you get a sell signal up here. That's 70 cents in the crude oil. Again, if you just get one trade like that a day, it should be happy days. Granted, I'll be honest, some of these are nice examples, but, these things happen day in, day out on different markets. Okay, so the next one I'll talk about is single print price rejection. This is the second setup, and this is something you need an order flows chart for. I don't have this program for a normal bar chart, but it's something that's very clear. And actually, a lot of other order flow software has been incorporating this into their software. But I'm the one that really brought it to the forefront. And single prints are price levels where volume levels have traded, small volume levels have traded at the extremes of bar. What I mean by single print is volumes between 1 and 9. 1 is a single print, 2 is a single print, 3, 4, 5, 6, 7, 8, 9. It's a single print, and I'll show you what it looks like on a chart. So, why do markets stop rising and then start to fall? Well, it's because the last person bought in that market that was going up. And when the last person bought, there's no longer any support in the market, right? If no one's buying anymore, what's going to happen to prices? Well, they're going to drop. And why do markets stop falling and then all of a sudden start to rise? Well, the last seller has sold, okay? And when the last person has sold, there's no more downward pressure. The market should rally. And what's the sign? Is you're going to see lesser and lesser buyers or lesser and lesser sellers. And how it looks. This is how it looks on an order flow chart. There'll be a box, For a red candle, there'll be a box up at the top of the bar, a red box, indicating the single print. On a green bar, it'll be down at the bottom on the bid side. This is the offer side up here. This is the bid side. And I'm really, looking for it as price rejection. On a move up, I'm not too concerned with it, but as the market is going higher, I'm looking for signs of price rejection. So you're going up, you hit this level, trade 6 slots. It comes off a little bit, makes another run up here, trades 11. Now I already know that earlier there was price rejection, so I'm looking to see if there's going to be more buying up here or not. You're just going to get something very similar, and it's a small number, but it's an area where I already know there's price rejection. So even if you test it, I already know that prices have been rejected there. So if it's any signs the market's starting to come off, which there are, you see the market starting to trade lower. You got some selling imbalances in here. I know that this area there's price rejection, and you can see the market. This is bonds, right? It moved from 153 down to 152.20. That's a beautiful move in the bonds. If you're looking at a normal bar chart, well, you don't know. You hit this level here, people will say, well, it's a double top, and you got this candlestick pattern, blah blah blah. Well, I'd rather have something more concrete, and I get it with the order flow. I get it with the numbers. I get it with the single print. It's very clear to me, and it should be very clear to you. So this is another example. This is it's a 5-minute chart, and look at you going nowhere for how many bars? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It's almost an hour. You're basically trading between 99 and 22.00 and a half. So that's a point and a half. And then I see you come into this area. You can see 700 traded, 387, 1. Over the last 20 minutes, 1 lot traded here. Okay, then the bar turns low. I know prices are being rejected here now. Every time we test this high, volume is getting lesser and lesser, and finally, the last buyer has bought. Before 305 people bought, before 87 bought, now just 1 person bought. That's very clear. That's what's screaming out at you. Then what happens? This is the bar here, the 1 lot. It sells off. You got a nice stack selling and balance in here. It's another single print. This is acting as resistance here, so you're just trading right along that area. And then the market falls off again. You got another single print in there. So again, look for these areas where you have the single prints. This is information even if you don't use my chart, if you use any other order flow chart out there, Gomi ladder, NOFT, whatever have you, you should be able to see this information. Mine just makes it a little bit clearer. I put the box around it, but again, I'm giving you trade setups that you don't necessarily need my software. Yeah, I would be happy if you buy my software. I think my software makes it a lot easier, but I know some people already have spent tons of money, a lot more than what I sell mine for, but they don't know how to use it, and that's what I'm here trying to teach you. So the last one is Delta Surge. And Delta Surge, remember I talked about Delta, is the difference between net buyers and net sellers in the bar. And the Delta Surge measures the incremental increases in Delta in a particular direction. And why is that important? Well, it shows that one side is getting stronger and starting to take control of the market. And how I came up with it is I used to trade a lot of grains. When I worked at Cargill, I was, for a certain time of the day, I was in charge of, I can't think of the term right now, but I say managing the palm oil trading book. But I'd make sure we were delta neutral, and so I was trading a lot of grains, a lot of palm oil specifically, and that's a market that you don't necessarily get a lot of price movements. And if you're looking at a 5-minute chart and you're just trading 1 or 2 price levels over 30 minutes, it's not moving. If the market is say trading 1957 bid at 1958 for 30 minutes, well, you're not going to be able to make any decisions on which way the market should go. However, if you look at the delta, you'll get much better clues. So, for example, this is the E-mini. It's a 1-minute chart, and you can see this area in here. We're trading between 21.23 and a quarter to 21.22 and a quarter. For 10 minutes, we're not doing anything. Every time you try to buy it, it comes off. Every time you try to sell it, it rallies. So, you can't make. You're going to get chopped. This is what chop looks like. But if you're watching the delta, you see right here, this is the delta numbers on the order flow chart. It goes 43, 243, 12, 60. shit, all of a sudden, buyers have taken over. And, the delta surge will draw an arrow on there for you. A red arrow for a buy, or a green arrow for a buy, or a red arrow for a sell. But it's telling you, hey, get ready, this market could rally. And what happens? This is the green arrow back here, and this is the end of this is the green arrow here. You can see in the next chart, this continuation, and you see it finally broke out of that 1 point range, and it went from 23 to up to 26. And again, if you're just watching a normal bar chart, this is how it looks. It's quite messy. You can't make heads or tails of it. We rally up here, and then we sell off, then we rally again, start to come off, then you just sort of hear, well, are we going to go up or are we going to go down? This is the delta scalper right here telling you that this market is going to go up. We took out this high here at 5 1/4. We got all the way up to, you can see we got all the way up to 26, and I believe went even higher. So that this was your sign here. I mean, it's pretty clear. It's an indicator that reads the order flow for you. This is another example, the delta surge. You're moving up here, then boom, delta is increasing, 215, 109, and you get this nice move. This is mini Dow. Okay, if you're looking at a normal bar chart, well, you sold off, but then you hit this low here, then you're starting to go sideways. Well, are we going to go sideways? Are we going to go up? Earlier you hit the low, very similar. You got this hammer here, you got a hammer here, hammer here, hammer here. People, candlestick guys, well, you got a hammer here, so it's very bullish. Well, you got a hammer here, you got a hammer here, the market continued to sell off. What you see down here is very similar up here. Hammer, you're going sideways. Hammers, you went sideways. Hammer, you're going sideways. Well, if you're reading the delta, you can see right here you got the indication. Buyers have taken control of this market, and it's moved from 875, at least all the way up to 925. It's a 50 tick move. These were some sells here. Kind of worked on depending on how you. This one I think would have stopped you off, but this one, is you're only talking about 5 or 6 ticks. I think you should be using more than 5 tick stop in the Dow anyway. So theoretically you could have caught at least this move, but this one, what'd you have? You had 1 tick of 1 tick against you, basically. Assuming you're able to get in, right when the bar starts. Maybe you got in here, but you have no drawdown on that trade. Like I said, you don't have any drawdown. Maybe you got a tick or two, but that these are the trades you want. Sometimes it looks like this where it goes up against you, but you take a little bit of heat for a few minutes and then it sells off. This is the Dow again, and we hit the high. This green line is the high of the day. Hit the high, come off, hit the high again, start to come off, and then you got the green bar just like you had here. You got 2 red bars, green bar, 3 red bars, green bar. Here you went back up, made a new high. Well, what are you going to do here? Are you going to go back up? Or are you going to sell off? Well, if you read the delta, 1451.89, you have the delta surge giving you a sign that, even though it's a green bar, sellers are in control of this market at this time. Again, if you're getting short here, you're getting short, you're taking a few ticks of heat, but are you willing to take 4 or 5 ticks of heat to catch this move? You're talking a move from 860s down to below 840s. And actually, this is a much bigger move. But again, it's here, right? This is this delta surge giving you the sell signal right here, and it went from 160 down to 060. That's a 100-point move. And how long did it take? 1202 down to 1210. A 100-point move in 10 minutes. These are the type of moves, as a trader, you want to get. Again, if you're looking at a normal bar chart, you don't see it. You just see you hit the high, you come off, you hit the high, you come off, you hit the high, you come off, you hit the high, come off. And, are you going to go back up, make a new high? This looks like you're just gradually taking out the highs, going higher. Well, you're getting a signal here in the delta surge that, what, chances are you're not going to hit that high, and then you get that nice monster move. These are the moves that traders just dream of. So by now that's 3 solid order flow setups I just gave you, and again, you could use them in your trading. If you're already using an order flow chart. If you're not, just let me know, and we'll get you hooked up. Don't make trading more complicated than necessary. A lot of people try to make things more complicated than it really is. Honestly, I'm a bit of an old school guy. I started on the trading floor. I know a lot of guys that made millions of dollars trading on the trading floor, and they got nothing more than a high school education. So don't think you need a college. It's nice to have a college degree. Don't think you need a PhD in math or anything like that, in physics, to be a great trader. Even though a lot of now hedge funds, that's what they're trying to hire. But the barriers to entry as a trader are much lower. You could open an account for $10,000, even less than that. You could even get memberships on the exchanges for, the memberships have come down quite a bit. But the barriers to entry for trading are much lower than they used to be. So you don't. While it's nice to work institutional level, you don't need to. You can trade for yourself and be successful. I know people that just trade for themselves and are successful. Single moms. I know a few that trade when they can, and they don't necessarily trade every day. I know people. Like I said, I've started on a trading floor. I know guys. Just to tell you, you don't need to be a rocket scientist or a mathematician to do that. I know guys that started on the trading floor after they graduated high school. They were supposed to go to college in the fall, and they got a job running. And then they never went to college. They just saw that they figured out that, hey, I can trade. I can probably make more money trading than I can spending 4 years in college, getting out with with some debt from my college loans, and then get a job and basically work that way for 9 to 5 the rest of my life. So I could be a trader. And they did it. Again, they didn't have college degrees. They just got common sense, and that's what a lot of trading is common sense analysis. So by now, you should know the benefits of order flow. What is order flow? Why it matters? Why order flow will put you ahead of 99% of the traders out there. Key components of order flow and its importance. How order flow analysis will show you hidden trading opportunities, and how order flow will help you take trades with tight stops to limit your risk. So the obvious question is, how do you use order flow in your trading? Well, there's a couple ways. You could do it slow. You could use trial and error, surf the internet, go to futures.io, read up on what Tulips 99 says about order flow, and try and figure it out for yourself. Or you could do it fast. You could get my order flow trading software package, which includes a lot of education, 15 hours of trading videos, as well as get access to the trading education room and access to me, and the software I've created has got, my way of trading, my analysis, and indicators. And the Order Flow Trader software package, what it is it's the Order Flow Trader software. So the charts you saw generated in this presentation come from the Order Flow Trader software. And I'm throwing in a couple indicators, Delta Candles indicators, which, most people are visual, right? And looking at delta numbers sometimes gets confusing, but using the delta candles, puts the delta numbers in candlestick format so you could understand it easier. Point of control trader is the indicator that you saw when I talked about extreme point of controls. It will mark on the chart where you have extreme points of controls. The order flow trading course is my 15-hour trading course on order flow. I normally sell it every day for $297. I'm throwing it in free with the software today, and you get access to my order flow trading room. The order flow trading room is not open to the public anymore. It's closed to the public. It's for my users. It's where you could come in, you could ask questions, you could watch me for a couple hours a day, Tuesday, Wednesday, Thursday, in real time, analyzing the market. If there's any trades that I took or want to take, I discuss them. You get all this for just $9.99. You may think that's a lot, but it's really not a lot. Plus, you also get my chart templates, so your charts can look just like my charts. You don't want to spend a lot of money on software. Then have to go spend 3 days trying to figure out how to set up your charts. You just, pop it in NinjaTrader, import my template, and boom, you're good to go. Normally I sell my software just by itself for $8.99. You know, these point of control trader indicators not even available to the public. It's a proprietary indicator just for me and my inner circle. Delta candles, same thing. Actually, I think I sell it for $200. I said the order flow trading course is, you know, $297 by itself. The order flow trade room, when I was open to the public, was $290, you know, $300, $299, I think it was, a month. I'm giving you access to the unlimited access to that as long as I've had it for 2 years already. I've got a year's worth of archives in there that you can lean on, you know, to get more information on trading with order flow. And you know, I put in the chat there. You can see the link. And so what you need to do is you go to this page, orderflows.com/webinar.html. You click on the button. It says "Let me in." It's down at the bottom of the page. You know, this is what it looks like. You go to orderflows.com/webinar.html. Scroll down to the bottom, and you click this button to let me in. It takes you to the payment page. But you know, I just want to point out 2 things on this page, just above that button that says let me in. You could download this little PDF that I got of hidden trade locations. There's additional 3 trade setups that are in there that, again, if you want to learn some more additional order flow trade setups, you can download this. This is a PDF. I think I've got how many pages, and it goes through 3 additional trade setups for you. You know, very limited risk that you can apply to your trading as well. The Delta Surge, this indicator that I showed you earlier in this presentation, it's actually an indicator I'm giving you for free. You can download it now for free right here. Okay, no money for this indicator. This is completely free. You can download it right here, Delta Surge. Click this button, Delta Surge. You'll be taken to a page. You just kind of enter your email, and it'll take you. After you enter your email, it'll take you to the download. Sometimes people, if you're on a mobile device, it doesn't let you enter your email. Just send me an email, and I'll hook you up. But when you click on Let Me In, it takes you to the payment page. It's a PayPal page. PayPal processes the payment. I don't get your credit card information. I don't want it. I get paid through PayPal. Most people have a PayPal account. If you ever bought anything online, you have a PayPal account, through eBay or whatever. You should have, if not, if you don't need it, you can pay, click down here, pay with a debit card or credit card. So it's fairly easy. So again, thanks for watching this presentation. If you have any questions, email me. It's my email, mike@orderflows.com. I have a YouTube channel. You should subscribe to the YouTube channel. I've been a little delayed on posting some videos. I've been sick for the last couple of weeks, so I've just finally gotten my voice back, and I'm able to talk for more than 5 minutes without having a massive coughing attack. But over the Christmas, New Year's holiday, I hope to get some more videos up. But subscribe to my YouTube channel. I got 50, 60 videos on there talking about different things with order flow. Like I said, you could learn a lot just by watching my YouTube channel, or you could speed it up by getting my package. You can go to www.orderflows.com/webinar.html. I put the link there in the chat box so you can see it there. There it is again. And Renee, I'll throw it back to you. Thanks for having me again. This is my last one for this year, and I hope to see you guys again next year.